Welcome to On the Chain.
All right, so this is on Fox Business with Charlie Gasparino as a guest, and cryptocurrency craze. I like it. I like it already. Let's see what we got. You ready?
Crypto-related ETFs sinking along with a slide in digital asset prices today. Charlie Gasparino is here with what Wall Street is weighing when it comes to the future of cryptocurrencies. Hi, Charlie.
Do you know that I would say since this route began in crypto, it shaved more than $1 trillion off the
Oof.
entire market cap? I mean, I think
Wow.
we were talking about a $3 trillion business back in a couple months ago, when particularly when Bitcoin hit that high of about $60,000. We're down to about 1.8 trillion. I mean, this is a significant sell-off. If you talk to enough traders out there, and particularly I speak to hedge fund guys who were all in, not all in, but it's significant. Everybody had a position in crypto of all the big hedge funds. A lot of I'm not going to say who, because they don't want to be they don't want me touting their positions, but a few of my sources said they're out, and these are major hedge fund people. They believe that this crypto, I guess, collapse is going to go further. Now we should put a Bitcoin chart up there because it's.
All right. So let me pull myself back. Here we go. So I find this interesting, and Charlie Gasparino's been, a great, researcher and really digging into what's been going on in the Ripple case, with the, obviously with XRP and the SEC and all of that. And, I look at, Charlie, and some of the things that he's referencing here. Now he's thinking about this, from a mainstream perspective, right? So you see these massive sell-offs. Now, again, even Charlie Gasparino is still relatively new to the space, but they're using, their analysis of the brick and mortars and applying it to the crypto space. Now, they could be 100% spot on, trying to use kind of, the historical trends of the financial markets, or, they could be completely off, if we've looked at and we've tracked. And so they're talking about this massive routing, this massive sell-off, moving from a $3 trillion market cap down to 1.8 trillion. Now, the one thing, if we analyze historically the crypto market, not to say that if you look at any market historically, that's exactly what's going to continue to happen in the future, but historically in the crypto space, right? And DNI said it spot on. But if you look at historically in the crypto space, it has its bull market, it has its bear market, it pulls back, and overall, year over year over year over year, the crypto space always is way ahead, year over year over year. And so, although it's referencing a pullback, and maybe, we're starting to see this. So let me pull this comment up, because this is like a spot on comment from DNI. Charlie is seeing crypto through Wall Street glasses, and that's 100%. They're trying to apply that to exactly that. Let's go back over here. Hang on.
Actually relevant. I know we have to do some stuff with ETFs, but Bitcoin is kind of an interesting. Yeah, it's interesting. Can we do a longer, not an intraday? Can we do like a 5-year, 10-year thing, something like that? Because you can see like how this thing is done over the past couple of years. Yeah, you got 1 month. Yeah, there we go. That's a year. If you can get 10 years, would be great. Just the longest we can. Because what's interesting, David, is that crypto is now back to trading on fundamentals, I think. And I think that's the upshot from traders. And what are the fundamentals? It's got to compete with the Fed. The Fed is raising rates. Crypto used to be an inflation hedge. If you think the Fed's going to get inflation under control by raising rates, that basically takes a lot of steam out of it. There you go. By the way, that's interesting. If you went down to
Look at that. Look at this, 3-year chart. Right. And again, they're talking about Bitcoin. It came from Bitstamp, it looks like. But look at this 3-year chart. I mean, so he's talking about the Fed now. He's talking about, interest rates being raised. And we're looking at this again from a Main Street, putting on the Wall Street glasses. Chip, we need to get those old school glasses we saw, those really thick frames, and those will be our Wall Street glasses. Got to find a frame like that. I'm going to go to my eye doctor over here down the street and see if he has any like old school, like super thick frames and see if we can get a prop for that. And we'll put on our Wall Street glasses and, big, thick lens Wall Street glasses to try to look through this. But this is 3 years, right? And if we go back even further, we want to go 10 years. And he said, hey, can we pull up a 10-year on this? But I like how, he's looking at this in a 3-year chart right now because 3,300 and it's sitting at around 40,000. 3 years. That is some phenomenal growth. Now, the one thing, even back in 2017 to 2018, during that period, when we saw that 2017-18 boom in the crypto space, where the mainstream media was like, "Holy crap, Bitcoin just hit 20,000, XRP's at 389 or 380 or whatever it was," and then on MSNBC or Fox Business, whatever channel it was, they're like, "This is how you can buy XRP," and they went onto the exchanges and they're show people how to buy it. All this excitement, and then the other side of the cliff, like, this is the end of cryptocurrency. Everybody is getting out. Everyone who got in is getting out of it. It's a disaster, and this is it's short term, and it's going to go away, and blah blah blah. And then it went through its bear market, as we know, right? So we had this period of time where it was just kind of like, and this is before here. So that's why we really need to see what happened in the 17-18 period. I can't believe that we're in 22 right now. It's crazy to me. But we hit that, almost 70,000 on Bitcoin, right? 70 from 3,300. So you put your Wall Street glasses on and you see that ramp up. But what do they focus on, right? They don't focus on the 3-year or the 10-year. They keep focusing on the day-to-day, right? They're looking at this. They're looking at the top, the all-time high to now. They're looking at that sell-off. They reference 3 trillion, 1.8 trillion. We're kind of back where we were. Maybe we're heading back to the big of the 2021. A lot of times, if we looked at the 10-year, not saying again that this is going to happen in the future, but if we looked at it historically, you'll see that the markets ramp up. They pull back to that first big ramp up. You'll see the pullbacks, and maybe after they hit, the highs, maybe there's a pullback to the last, all-time high as it ramped up. And then you're going to see that parallel. It's going to potentially pull back, maybe dip a little further, and then maybe go up. So if we'd have to pull up our own 10-year chart, which I could do, but we're kind of going through this video. But it's amazing because to me, this is meaningful long term, right? And that's what Alan was talking about. Alan is referencing, hold, because the longer term, when we look at it in a 10-year cycle, our 5-year cycle, it's not get rich quick. I'm going to make $1 million tomorrow. Let's go back to this. Hang on. Let's go here. Let me play it. This is good stuff.
Levels in 2020. By the way, crypto would still be it would still be double from where it began. Bitcoin would still be double from where it began. So don't expect this thing could go a lot further. Again, trading on fundamentals. The Fed, it was once an inflation trade. When the Fed starts raising rates, it literally takes the steam out of a lot of speculative assets. This is one of them. I think number two is that some of it is being divorced from the blockchain. And in the past, and now it's being looked at with the blockchain. Is blockchain making the strides that we thought it should through this whole craze? You still can't buy a slice of pizza with crypto. The blockchain.
I disagree with this part, and it's interesting, all respect to Charlie Gasparino and the research. But again, like DNI said, he's looking at this with Wall Street glasses. He's referencing blockchain as a mechanism for buying day-to-day goods. Now, I disagree with that because the blockchain isn't about buying pizza. The blockchain isn't about day-to-day goods. Cryptocurrency isn't about daily expenses. We have dollars for that right now. We have credit cards. I don't need XRP or Bitcoin or Ethereum or Doge or any of those assets to buy anything. I take my American Express. I go to the store, I swipe my credit card. I don't need crypto to do that. I don't get charged a percentage fee. I don't get charged anything. I even get, either points or I get air miles on the different Amex cards I have, right? So you're either going to get your points or you're going to accumulate Delta miles, and you can, and use it accordingly. I'm good with that. I don't need cryptocurrency to buy anything, anything. Yeah, let's continue with this.
Is not that universally used, and I'll tell you, David, unless it becomes much more embedded into the real economy,
Right.
people are going to question the cryptos. And there's one other thing which is hanging over it, which I think is going to hang over for a while, and that's regulatory uncertainty. These guys don't know
Yes.
who should regulate it. The Fed wants to do it. Gary Gensler wants to do this. CFTC wants to do that. You really need Congress to step in and say, we need one uber regulator, and here are the rules of the road for everybody.
Boom. That to me, that's everything. Charlie Gasparino hits it out of the park right there, right?
Are you down with OTC? Please like, subscribe, and click the bell to be notified when the next video drops.